Hello and welcome to this special show, and we have with us a guest coming in who owns a $60 billion fund and operates that as asset under management but is not present in India. We are talking about Joseph Harvey, the CIO and President at Cohen & Steers. He's right here in Mumbai with us. Joseph, good to have you on the show. Now, first of all, you have a large asset under management globally, over $60 billion, and not a single dime has made it to India. What is the reason for this?
Well, good morning, Nisha. It's a pleasure to be here and chat with you. We're one of the largest investors in listed real estate companies around the world, REITs, and listed infrastructure companies, also a global strategy. We have invested in India historically, but it's been very small relative to our portfolio. And one of the reasons why is the universe of public companies in India isn't exactly what we're looking for as investors. The existing universe of companies is rather small. They're development companies, so they own large land banks, and their profits come from the development and sale of real estate compared with what we're interested in, which is the ownership and operation of income-producing assets like office buildings, shopping centers, industrial properties. And on the infrastructure side, it would be similar income-producing assets like toll roads, airports, cell tower companies, hard assets that generate strong cash flows that are predictable, and cash flows that can grow over time.
Does this mean that now with REITs and InvITs really starting, it fits your strategy of investments, and are you now seriously looking at India for more investments?
If you think about India, where the interest rate and yield regime is higher, and understandably that comes along with higher inflation and potential for currency risk, those present investment challenges. Yes. But I think that if REIT-type companies can be structured and brought public in a way to develop these characteristics, that globally there will be a lot of interest in those characteristics. Because, again, we might be in a world where we have convergence of yields. That is, emerging market yields have the potential to decline, while there's only one way for developed market yields to go, and that's up. So under the right circumstances, and because we're pioneers in REIT investing, and we've helped develop REIT markets all around the world, if India builds them, we will come.
So what is the kind of expected returns that you look out for?
Well, in the global portfolio, we would be interested in returns in the 8% range, and if 3 to 4% of that came from current dividend income, and the balance from growth over time, we would be, very pleased for our investors. To invest in an emerging market like India, we would require higher returns to compensate for the inflation risk and other macro risks, and including the currency risk.
So are you, in your visit to Mumbai, also speaking to a lot of developers as well as some of the private equity players who are here for REIT and InvIT investment?
Yes, at this conference we will speak and share our experience from two perspectives. One, from the U.S. perspective, which is the largest REIT market in the world, and over a very long period of time. REITs were developed in 1960 in the U.S. They have delivered very strong returns to investors, 11% over time, and that's outperformed stocks by 2.5 percentage points and bonds by even more. And it's enabled all types of investors, including individuals who don't have the wealth to buy a property, a commercial property themselves. So we'll be speaking with commercial real estate players here, and I know some of the REITs are getting closer to coming to market, and we'll share our views on what works, what doesn't work, and what we like to see. So we're very excited about the next 2 days.
So how much funds could you really deploy if the way the restructuring goes, it really is palatable to your funds?
Under the right circumstances, and assuming we get comfortable with the top-down or the macro situation in India, and if the companies are structured right, we could have 5% to 10% of a portfolio in either real estate or separately infrastructure allocated to India if we have the types of companies that produce the results that
So 5 to 10% of a $60 billion?
Correct.
All right. And what is the timeline that you could look at for this kind of an investment?
In terms of our holding period, because these types of companies are pretty stable and predictable, we like to own them for a long time. We're not flighty capital. I would add here that this week we're celebrating our 30th anniversary as a company. When our co-founders, Marty Cohen and Bob Steers, founded the company in 1986, the U.S. REIT market was very, very small, but we believed in it, and we were patient. And the market in the U.S. didn't start developing until 5 years later. And now we think about 30 years later what it has become, and it's quite a powerful story. So if there's progress made over time, we'll spend more and more time in India.
So, of course, Joe, many congratulations to Cohen and Steers team for 30th anniversary. Of course, what we do gather from the market is that in the first 6 months, things could be a little slow and then probably pick it up over the next 3 years when it comes to REITs. Are you looking at REITs and InvITs both, or are you more focused on REITs in India?
We're focused on both real estate and REITs and infrastructure and I don't know what you call it here, but the
infrastructure
investment trusts. Infrastructure is much earlier in its development globally in the listed market, but it's one that has the potential to be as large, if not larger, than the real estate market because of the needs we have to build and replace aging infrastructure depending on where you are in the world. And there are many different asset classes that fall under the infrastructure category, but we're very committed to the infrastructure area and very excited about that too. I would expect, just as in India with the Infrastructure Investment Trust, that more and more regulators will be looking at these structures to provide an avenue for capital to be raised to solve this infrastructure challenge. And the avenue is a vehicle that is designed to deliver the characteristics that these asset classes produce and that match with what investors need today: income, predictability, and growth potential.
So yes, so Indian market is clearly evolving, and we are trying to take more instruments from overseas as well, which have really worked overseas. But at the moment, are you only looking at these kind of commercial cash generating assets and mode of investments, or are you also looking at some of the Indian listed entities? There are a few Indian listed entities in the real estate sector, though a large part of it remains unorganized and in the private space.
Well, we have looked at, as I mentioned at the outset, we've invested in some of the developers that are listed today, but it's really not our focus right now. And not to take this conversation off into a different path, but I would add that one thing that would help not just our capital come to India, but others too, is if the regulators could help bring down the barriers to foreign investors in the public market and simplify the paperwork that's involved in opening accounts, and also reduce some of the costs to investing in India. We find that some of our clients, who are some of whom are very substantial pension funds around the world, don't want to open accounts in India because of the administration and paperwork and cost of opening accounts. So, separately from the conversation about the development of the REIT market, that is one thing that would help stimulate capital to come to India.